Hey, welcome back. Today we're going to take a look at how can you take your primary residence, your house, and turn it into an investment property. Why would you want to do this? When would you want to do this? How do you want to do that? And what are the things that you want to take into account if you're considering turning your house into a rental? All right, so first of all, why would you want to turn your house into a rental property? Why not just sell it right off the get-go and be done with it? Well, there's lots of different reasons you might want to turn your house into a rental. First thing is necessity. So quite often people become accidental landlords because they get a job transfer and they have to leave their home where they're living and buy another property in another area, another city, another state, province, what have you. Okay, and perhaps the market where their current home is not great right now for selling it, or perhaps they don't have enough equity in that house to actually sell it and make a profit, or they have to go negative if they sell it and actually end up paying the realtor to sell their property. There's all sorts of different reasons why people might need to have two houses, okay? So first of all, there's lots of reasons why. The question is, how do we do it most effectively? So the first thing you want to take into account are legal and zoning considerations. What do I mean by that? Well, first of all, it's probably not illegal to turn your house into a rental property. However, it might not go with the zoning or the strata or the condo rules and regulations where you live. So typically this isn't a big problem if you own a single detached house that's on its own property. You can turn that into a rental. Where it can be a challenge is if you own a townhome or a condominium or an apartment and the apartment has rental or the strata unit has rental restrictions. So for example, there are a lot of condo buildings that have a limited number of rentals in that building. So if that capacity is already taken up, then you're out of luck. You're not allowed to have that property as a rental, and there can be serious consequences if you do try to sneak it in. So you always have to take that into consideration. Certain communities, like 55 plus type communities, have rules and regulations about there being no rental properties in that unit, right? In that complex. Or if they are rentals, you can't have anybody less than 55 years old as your tenant. So again, these are the kind of things that can limit things and that you definitely have to take into consideration if you want to turn it into a rental. Now, if you're thinking about taking your property and turning it into a short-term rental, like an Airbnb, there are a lot more considerations. Like there might be rules and regulations and bylaws in the city or town that you live in that prohibit or prevent people from having short-term rentals in their homes. So you have to be aware of that. Next thing you really want to take a look at if you're considering turning your house into a rental is studying the market and figuring out exactly how much is your property worth in rent per month. Like you might have an idea of what you think it's worth, and that could be pie in the sky, that could be really unrealistic, or it could be really a lot less than what going market rents are. Especially these days, rental market has gone kind of crazy, especially in bigger centers, and rents are very, very expensive. So if you don't do a good market analysis, you could be shooting yourself in the foot and charging way less than you should be for your property. Or if you don't understand it and you think your property is worth a lot more than what it really is, then you won't be finding any tenants and it'll be going vacant for a long time because nobody will pay the price. So make sure that you understand what fair market rent is for your kind of property in your market. Another thing you're going to want to look at when you're turning your property into a rental is what needs to be done on the property. As we live in a property, we kind of get accustomed to some of the things that might not be working or might not look all that great. However, they could be a big turnoff for a prospective renter. So you want to make sure that you stand back and you look at your home with cold, calculating, logical eyes, not emotional eyes as the homeowner, but the cold eyes of logic and reality as a landlord, as an investor, as the property owner. What needs to be fixed up? What do you need to do to increase the curb appeal? What kind of things are you used to that would really annoy somebody else if they were living in that property as their home? And then go ahead and make those repairs, those renovations, and bring it up to snuff so that you can get top dollar for the property and attract the best tenants as well. Another consideration when you're turning your property into a rental is how are you going to manage that property? Are you going to be the landlord? Are you going to be the one in charge of finding tenants and managing those tenants and making sure that they're doing everything properly? Or are you going to hand that off to a professional property management company? So again, those are things to take into consideration. Chances are, if you're living clear across the country, you might want to have a professional property management company take care of things for you. But here's the challenge. Most property management companies don't really want to deal with single family homes. They like to manage apartment buildings. They like to manage multiple units. They get way more bang for their buck having one client on board who owns 3 or 4 apartment buildings with hundreds of units versus you and your single family home, because typically there are a lot more repairs and call-ins for a house than for an apartment. So they're going to charge you top dollar for managing that property. I've seen anywhere from 10 to 30% property management fees for single family homes. So you have to take that into consideration when you're thinking about turning your house into a rental. So there are some other options you might consider if you're looking at taking your house and turning it into a rental. If you'd rather not do it the traditional way, you could sell your property subject to the underlying financing. You could do something that's called an agreement for sale, where actually the title of the property doesn't transfer to the other person until they paid in a certain amount. You could do a rent to own deal on the property. That way you don't have to worry about maintenance and landlord type issues as much. There are different options if you don't want to be a landlord yourself. Now, on the other hand, if you're looking at turning your house into a rental because you want to start becoming a real estate investor, you want to grow your portfolio, then there are other things that you can do as well. One thing you could do is, instead of turning your house into a rental, why not buy a rental house, right? Why not partner up with somebody and do a joint venture and buy the property together? You do all the work, they bring in the cash, and you share in the profits. If you're interested in doing that, I've got a proven formula for making that happen. It's called the Money Partner Formula. You can get it in my book for free. Well, it's not quite free. I'll trade it to you for your name and your email address. So just click on the link in the description below, or you can go to investorattractionbook.com and get your copy today.